Bitcoin is disrupting central banking. Like that was the statement. And I've been working in startup land, and the word disruption was very familiar. I was like, oh yeah, you're looking for high return opportunities where software is going to disrupt, traditional business models, where either it's like a disintermediation of like a broking type layer, or you're looking at like automating the back end of a legal company, or who knows, right? And you could either be the founder of that business, or you could put money in as startup investors, and it's all very exciting. But I'd never once stopped, slowed down, and thought, oh, hang on, what about the money? Could we disrupt the money? And that was a really big day, because it's like, oh. And it's almost like 3 tiers of kind of shock. You're like, oh, maybe we could. What does this mean? Okay, well, what is
Yes.
the central bank? And I mean, wow, like a whole nother rabbit hole comes out there. What I'd love to ask you about, James, actually something that's coming up for me a lot at the moment in my general investing research, is that we've covered quite well some of the fundamentals, is why Bitcoin's important to catch your attention and start investigating it. But how important for you is global liquidity from a perspective of central banking and the way that they inflate their balance sheets and the price of assets generally? And is Bitcoin just a supply and demand game where it's like there's just fewer people that want to sell than that want to buy, and the price is going up? And what are you seeing in your charts in relation to potential monetary easing policies that we see?
Yeah, I think Bitcoin is often described as the last functioning fire alarm. And the concept there is that money is always growing and contracting, right? And there's all sorts of things that do this. Let's go back to that concept that the world is a relative game. So there was a chart that was shared a little while back. People look at how much money is in the world, right? Global liquidity. There's various other ways people measure it. But basically, it was declining quite sharply, I think through December or thereabouts. And the decline of it was interesting because the longer you spend time within markets, you start to recognize patterns and shapes. And I was like, oh, look, the decline of that global liquidity actually just looks like the inverse of the US dollar getting stronger. And when you think about it, if you're trying to take all the money supply in China and Japan and the US and the Eurozone, if you put all these together, how do you normalize them? Well, you have to price them in US dollars, right? That's the base case. So if the US dollar gets stronger, then the total amount of money in USD terms in China goes down, right? It's worth less in US dollars. So that's one example of something that affects how much money is out there. And if everyone's borrowed US dollars, which many countries and companies have, if the US dollar gets stronger, it's like if you borrowed in gold and suddenly gold gets more expensive, you have to pay back the gold. So your debt becomes harder to service. Same thing with the US dollar. And you start to recognize there's actually about 3 or 4 prices in the world that really matter. There's a lot of prices, but talking about that engineering analogy of like, what do I put on the back of my envelope? What is the strength of the US dollar? Because that's what everyone borrows in. What is the price of oil? Because that's what keeps the economies lubricated. As an extension of that, you could say just commodities in general, but oil is really the centerpiece of it. And then there's treasuries, bonds, because bonds are the base level of the financial system. And if bonds start to sell off and fewer people want to hold them, interest rates go up. When interest rates go up, everyone's mortgage goes up. When everyone's mortgage goes up, people have less money. So that drains liquidity. And these work obviously in both directions. So you start to realize that the world is a relative game. There's a handful of really big assets, the dollar, oil, bonds, gold, and Bitcoin fire alarms. They tell us information about how that liquidity is changing. The world is a complex system. Markets are complex systems. And I have given up. And I'm very open about, I can't predict any of this stuff. No one can. Nobody knows where this goes. We can certainly look at all data sets to try and get a bit of a feel for where we're most likely to go and as trends start to shift and change. But in my view, Bitcoin and gold in particular, those two, they're really the assets that people go to when they're like, something ain't right. Something ain't right. I don't buy Bitcoin because everything's hunky-dory. I buy Bitcoin because I can't live if I just continue to work an engineering salary, I will go broke. I will never buy a home. My purchasing power will continue to go down. My wages will never keep pace with inflation. I will be further and further down on the treadmill. I don't buy Bitcoin because everything's going great. I go buy Bitcoin because everything's not really that great. Now, I say that from the perspective, being very aware that there's about 8 billion people in the world who would rather be in my shoes, right here in Australia, you and I. So that's coming from a very relative perspective. There's a hell of a lot of people who are far worse off. And if we're still feeling it as well, and I'd say most people listening to this podcast, you probably understand exactly what I'm talking about, then we have a problem, right? And that's really why Bitcoin and gold, they're important, because they give people something to just hang on to. It will get through the storm. It will get through to the other side. You will have that ounce of gold, and you will have that UTXO on the other side of whatever comes. The price of it may change and fluctuate, but you're going to have the asset. It's not going to be taken away from you. I think that's why you sleep well at night.
Yeah, it's cool, isn't it? The idea of sleeping well. It totally resonates. Another big lesson was the day I realized, hang on, what's the probability of Bitcoin actually dying, like completely disappearing, going to zero, like, annihilated? And I came to firm conclusion that that was basically impossible. And never say never, right? Of course, we don't know, to your point. But in any other investment, I'd never come across that before. Because you might buy, Qantas, an airline heavily backed by the Australian government. What can go wrong? Well, it could be completely bankrupt, and it might not get a bailout, and therefore it could disappear. Or equally, a government bond. Well, as you've seen from the history of money, right? There's been hundreds and hundreds of different currencies, and basically all of them always die. It's like at some point it will happen. And that's what really was so fascinating about this idea of like, okay, well, over 100-year timeline, what's actually still around? And you mentioned the word risk. It's like, okay, well, actually, Bitcoin starts to make a lot of sense the closer you get to it. Because even if you buy and you get hammered in a horrible bear market, is it going to zero? Well, the answer is no.